Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 721st video, baby. Yeah. 721 videos geared to teach you about technical analysis. Traders, as we all know, futures trading is extremely risky and can cause substantial financial loss. It is not an easy game. It requires a lot of capital and all the hours that you can stay awake. If you're not practicing and studying these markets, this is not going to be an easy game for you. However, if you are practicing, if you're studying, if you put your stops in and you follow the techniques that we teach you in these videos, you should find yourself on the winning side of the market on more occasions than not. Traders, video is being filmed on Monday night for Trading Tuesday. That would be April 19, 2011. And what are you pointing towards?
Your shirt sticking out of your suit there, buddy.
My shirt sticking out of my suit? Where would that be? Down here?
Right here.
In the oh, well, it's supposed to, don't you think? Why am I in a suit tonight, Mike? Do you know?
Was it your interview?
Yes. Interview on CNBC tonight, right? I'm supposed to be on TV. I got this whole thing. I studied for hours today. Got my write-up, got everything I want to talk about. You know, I got a rant coming. And it turns out that my producer gave me the wrong time. When I showed up, they're like, hey, Oscar, you should have been here about an hour ago. Not my fault, however. But hey, so I didn't get to do the interview tonight. I'm sure they're going to call me tomorrow or the next day, so be prepared. I do have a rant I'm going to unleash on television, traders. So if I get my opportunity, please be there to listen. What's on the board for tonight's video? However, this is right now top day. Traders, right off the bat, I got something to say to the S&P rating system. Boo! How dare you downgrade the United States? What is it with you people? Are you insane? I'd like to know how many of your family members were long puts before you made that announcement. I'll tell you what. Do you know that the United States is not coming out of its recovery? You somehow have information that the rest of us are not privy to, that do not come up on the charts? I don't think so. I don't think that should have happened. But hey, we'll trade what they give us. What happens now with the S&P ratings knocking down the ratings on the United States? Obviously, there'll be a stumbling block in front of our markets. But traders, I'm here to say this. Blame it on anything that you want. Blame it on Moody's. Blame it on the S&P. Blame it on the president. Blame it on anybody you want. But I know who you should be blaming this downturn on. And the downturn is on the crude oil. Traders, there are bear flags flying all over the U.S. indices markets right now. Those bear flags were created literally 3 days after crude got above 110, and I have charts to show you that. You've heard me mention this in countless videos, that if crude decides to go and once it gets above 110, we're going to have trouble, right? I have charts to show you. I don't care who rates what. I don't care what comes out. I have charts to show you that crude oil, which we talked about a good month or so ago, if it got above 110, would start to knock our markets down. If it gets above 120, we're in big trouble. You've heard that from me many times, right? Crude got above 110, 3. Count them. 1, 2, 3. Yeah, that middle finger was for a reason. 3 days later, the markets go into a tailspin. And wait until you see the chart I am about to show you. That will absolutely put that picture before your eyes and make it real, the threat that we have when the price of crude goes too high. It is not a threat here in the United States. It is a worldwide threat. It is a big problem for our economies. We are already feeling it, and the driving season hasn't even begun yet in this country. So it's going to get ugly here. The higher price of crude goes, the faster we will start to feel the downside. Granted, crude came off for a couple of days, but it isn't over, traders. You have speculators holding almost 50% of the open interest. They're going to take it higher because why? They don't want to lose on their positions, and I don't blame them, right? There should be some sort of limits on speculators if we didn't just stop them completely from trading in the crude. But I do have something to say. Gary Gensler of the CFTC, he is chairman of the CFTC. A few nights back, I sat and watched him testifying in front of Congress, and you know what he said? He's doing everything in his power to create position limits in the crude oil, and he's talking to Europe and Asia, and he would like to implement it in all 3 parts of this world at the same time. How about that, guys? All right. Maybe they're hearing us. I can tell you this much. You let this wild card go much higher, and that arrow is going to have 2 or 3 of them in front. It's just going to really hurt the U.S. stock market. Traders, I'd like to show you some charts that will basically explain why this isn't the only reason why we're going down, and it's probably more to do with crude than anything else. With no further ado, let's go look at some bear flags. Okay, traders, the first chart you're looking at is the Dow Jones Transportation Average Daily Bar Chart, deemed the leader of U.S. indices. And what do you see has constructed before your eyes, traders?
A bear flag.
A bear flag, absolutely. I'll clap for you guys. Good answer. But I'm not clapping for the bear flag by any means. Traders, that bear flag is unequivocally going to knock us lower. That's what bear flags do. They form and then you break down lower. I will show you many examples of bear flags in many charts, in many videos. You'll see a few examples here. Maybe the next video I'll take you on a little memory lane and show you how many bear flags have turned out to go lower, but I don't think we even need to do that today. Bear flags are bearish, and the bear flag started right around, see that little arrow? I'll show you what that date is in a little while. But right around here is where we began our new formation, which turned into a bear flag, that little arrow. Let's look at another chart here because you're going to find these charts interesting. The NASDAQ Daily Bar has a bear flag as well, traders, and I hate to see these bear flags in our leading indices, but they are here, and basically there's nothing we can do but trade them on the downside. However, this could have been another formation, and it could very well still be another formation that is building at the moment, traders, and that would be the inverted head and shoulders. This is the very same chart. It is the NASDAQ. All I did was zoom out a little bit and show you that what we've done in the last month or so is put in an inverted head and shoulders, which in most cases is bullish, and I think would have remained bullish if crude did not get above 110. But right here at the top is when crude got above 110. More on that in another few charts. But the NASDAQ did have an inverted head and shoulders, did maintain levels above the OMNI average, and does have a projection higher. But with the price of crude the way it is, I don't expect we're going to see it anytime soon. S&P E-mini, exactly the same thing. Is it an inverted head and shoulders? Well, at this exact moment, it's not looking very promising that it is an inverted head and shoulders. In fact, you can pull a bear flag out of these bars right here if you look a little closer. So what you do have is right now a stalled formation and a bear flag in leading indices and in the S&P. Okay, traders, now this is the reason why I wanted you to watch out for this date, April 7th, 2011. Dow Jones Transportation Average, the leader of U.S. indices. You see that little dot right there? This dot represents the first day crude oil got above 110 per barrel, right there. And then look what happens next. The bear flag gets formed. Do you want to see that date, traders? Here is a crude oil monthly bar chart. Red line represents the price of 110 right here. That was exactly 6 to 7 trading days ago, depending upon what index you're looking at. That was when the high was put in the indices. We went for 2 days with crude at 110, and indices started to break almost immediately. You don't see crude breaking as hard as you see indices breaking. The size of the move crude has had up a few hundred points down is meaningless. Crude getting back above 110 this week would be very, very detrimental. But when you look at this chart, it looks like we are on our way to go possibly test some of these highs. I hope we never see this again at 147, but the chances of seeing the 120 area aren't that, well, are pretty high, actually. We can end up here. Traders getting up there would be really, really bad for our market, our stock market. So keep your eyes peeled on crude. Crude is the wild card. But again, the important thing is that date of April 7th was basically when crude broke 110, and immediately the leader of U.S. indices went into a tailspin. That's what happens when crude gets above 110. Traders, pull your own charts, do your own homework, take a look at the crude, and then go find your bear flags on the U.S. indices. So, traders, you've seen the charts. There is my technical argument for the downside. And I can say this, I have 0 to clap for in this video, so I'm not going to do it. There's bear flags, I'm not clapping for them. There's bullish crude, I'm not clapping for it. There was a ratings downgrade for the United States, I'm not clapping for that. There's nothing to clap for in this video. you know, there's only one thing that we can clap for, and you know what? Let's clap for this. The 1650 call on the S&P. That 1650 call Omni made is still valid. We still expect it. There is a long way to go this year, traders. Last year, when Omni made its call for 1290, we dropped 115 points in the S&P before we ended up making that projection. So, we've made our call for 1650. We've dropped several points. Does not take our projections out of focus. We have come nowhere near any threatening areas. So, our 1650 call deserves a round of applause. And I am standing pat on that number. Now, if the market does change its complexion completely and takes out some levels that would then make me take this off the board, I will certainly keep you informed, but boy, oh boy, we'd have to crack so far, we'd all be broke by the time that happens, so I'm not going to worry about it at this point in time. We'll cross that bridge when we get it. Traders have done another round of applause. I guess I could find things to clap about if I really wanted to. A round of applause for all you members showing up in my chat site. I have had hundreds and hundreds of new OMNIX show up, and thank you so much. If you are there on Tuesday, I will hold a live class for all of you so that we can look at the flags, we can look at the crude, we can see what's going on out there. So if you are at my site, livewithoscar.com on Tuesday, I will hold an open free class for the world to see. We'll do some analysis together. Guys, am I out of here?
Just let everyone know we're going to send an email out before class starts. With the
Good idea. Traders, as always, we will email you, we will Twitter, we will Facebook, we'll do whatever we normally do to let you know that a class will be held, and make sure you show up for the class because they are quite interesting and they will keep you in focus of what's going on. Hey, OmniCamp members, thank you so much for filling out your applications. Please continue to fill out your OmniCamp applications. I will call you personally to see if you qualify to join us at the end of May. All right, I'm getting out of here. There's not much else I want to say. It's a hot night here in Vegas. At least I'm hot. I don't know if you guys are, but yelling in a suit like this for 20 minutes, let me tell you, it heats you up. All right, so I am going to be looking for the downside in the S&P. We are going to sell rallies. I think crude oil has started this mess. I pray for crude to get back under 100, but I don't think that that's coming our way. Traders, something I haven't mentioned to you, which normally I'll wait until Monday to talk about it, but it seems to have happened already, and we will do a much more extensive video tomorrow night about it. 3-day holiday weekend reversals are abound. Look at the markets. Almost anything that we traded on the upside last week went down this week, and almost everything that was on the downside last week went up this week. Look at U.S. dollars. When's the last time you seen green in the dollar index? That was up today. How about that, right? Traders, take a look. 3-day holiday weekend reversals are all over the place. They usually start about Tuesday. Looks like this week they started on Monday. What that means is this. Most traders that are worth their salt in any part of this industry are gone by Wednesday this week. They're going to their homes up in the mountains. They're going to visit their mothers. They're going to visit family. They're going to celebrate their religious holidays. We have Easter coming this weekend. Easter, Passover, you name it. If it's your holiday, it's worldwide, right? Lots and lots of people take off by Wednesday. Funds are done trading by Tuesday, and it's left to nothing but really speculators and gamblers for the next 3 or 4 days. I will not participate in that mess. We may trade tomorrow. After tomorrow, I am shut down until we get back from Easter vacation. So I hope that you do the same thing. You do not need to be in these markets when they become erratic, when the volume gets thin, when volatility expands, and when one fund can come in at a surprise and move a market in any direction. You do not need to have your money on the table when that happens. Speaking of money, I know we lost some money today, traders. How many of you got tagged in the S&P? Hey, look, not much we can do when they come out with that Moody's rating. We did have the bear flags there, but they were not confirmed. So we were hoping that we had the inverted head and shoulders. That isn't working out. The bear flags are certainly confirming themselves because probably the S&P rating in the crude. So now we got to trade the downside. Some of you got stopped out, but did you notice Omni only used a 6-point stop yesterday? How often do you see Omni in such a tight stop? So Omni knew something ugly was coming, hoping for the upside, turned out to be on the downside. However, when we see tight stops in Omni, and the day before they were even smaller, when you see tight stops in Omni, you know that you are vacating the area. That's basically what happened. We vacated the area, stops got tight, they did get hit, Tomorrow, I don't think they're going to catch us because obviously we're going to flip and be on the short side with the rest of the market. So have your stops in. Never, ever, ever, ever trade without a stop. We know that a stop is your best friend. Barring that, there's not much else I can tell you about tomorrow except for hold on to your hats because I think there's more selling coming our way. Traders, try to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.